Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as we start a new week this Monday morning, around about 10:30 this Monday morning, markets did open up with a positive bias, corrected down, and once again we are seeing all the three leading indices in the green. Before I go any further, let me give you certain levels on Sensex, Nifty, Bank Nifty, and of course rupee, dollar, and crude oil. So Sensex is up about 100 odd points. 73,905 is the level on Sensex. Nifty is up about 40 odd points. 22,416 is the level on Nifty Spot. Nifty Bank up about 160 points. 47,460 is the level on Nifty Bank or Bank Nifty. Rupee stronger against the dollar, and if you recollect over the last week and fortnight, we've been mentioning on both these aspects, rupee to be a little bit stronger against the dollar and possibility of seeing levels of sub 83, and that's where we are. Rupee is trading at about 82.89 rupees to a dollar with a strength of 0.01 paise. And on the crude oil, below $80 is where NYMEX is, and close to about $84 is where Brent is. To give you exact levels, Brent is trading at about $83.61 to a barrel. NYMEX is about $79.91 to a barrel. Now, firstly, on these two aspects, rupee, dollar, and crude oil, well, expect the sub 83 levels to continue, and possibly if the news flows are positive, then we can see rupee gaining more strength against the dollar, and possibly levels of 82.75, 82.70 could be seen, subject to, of course, the demand for dollar in the markets, but likely to see a little bit more stronger rupee for this week. On the crude oil front, I think slow and steady downward move towards $80 a barrel on the Brent and towards $76 and $75 a barrel on the NYMEX cannot be ruled out unless and until there is any significant demand that comes up in the near future. Friends, this week is going to be truncated. On Friday, that is 8th, we are going to have a day off on account of Mahashivratri. So this is going to be a truncated week, one day less we have this week as far as the trading session is concerned. And maybe that may lead to a little bit of choppiness and volatility as we approach Wednesday and Thursday this week. On the markets, friends, yes, last week, last week and week before, that is a week and a fortnight back, we had mentioned a couple of levels, 22,000, 22,150 on the lower level. We did break that 22,000 momentarily and went down, but again managed to recover. And the breakout about 22,250, 22,300 is the result where we are right now at 22,400 and above. So the expectation is that this momentum on the upside will continue, but it will also be witnessed with profit booking and a little bit of choppiness given the elevated levels and a truncated week. In the month of March, other than the advanced tax numbers, which will give you an insight as to how the earnings is going to be or profitability is going to be, will possibly guide us, but that will happen only after 15th of March. Once the advanced tax numbers are known to us, we'll be able to derive which way the fourth quarter earnings is likely to be, and we'll take cues from there. Levels as far as the markets are concerned, friends, given the backdrop of events that we are in and the fact that no major event on the domestic front or on global front, adding a tailwind positive, levels of 22,500 and 22,600 can be seen either this week or coming week, plus minus 50-60 points on the Nifty Spot I'm talking about. And on the lower side, I think our sense is that 22,000 and 22,200 is going to hold out very smartly. At least that's what the indications are. We've been to those lower levels, and again we are able to bounce back. So the broad range for the market for this 4 odd days truncated week, 22,000, 22,200 on the lower side, and 22,500 and 22,600 on the higher side. But mind you, friend, there will be choppiness and volatility. So you should possibly, if you are a trader, try to book profits as we go closer to 22,400, 22,500 and 22,600. And if you are an investor, try to identify stocks somewhere around 22,200 and below, closer to 22,000 from a long-term perspective. The growth, GDP growth for India, friends, just some time back, Moody's has given out a positive outlook as far as India's GDP growth rate is concerned, and they have moved the mark on the GDP on the higher side. So this can excite the market to a great extent. And mind you, friends, slow and steadily, even our estimates are that we are possibly going to surpass the levels that we have seen in the recent times as far as higher levels of GDP numbers are concerned, and possibly move towards a higher trajectory. That will also excite a lot of foreign institutional investors to look at India as an investment destination as far as FII flows are concerned. But having said that, I think domestic investors' numbers are growing leaps and bounds. The way the numbers are coming in terms of new demat account, new trading account, new footfall as far as SIPs are concerned. So that inherent strength from domestic investors are getting passed on to the domestic institutional investors, wherein they have the might of facing the any kind of selling pressure, large, small or medium, from the foreign institutional investors. So expect the movement to be positive as far as markets are concerned, but it will be faced with a lot of choppiness and volatility, and levels elevated above 22,400 and move towards higher levels of 22,500 and 22,600 cannot be ruled out. So keep your positions intact from a long-term point of view. Short-term, I guess you should use your own wisdoms to partly taking off profits off the table rather than being caught in any unpleasant situation. Friends, as always, we give you two investment ideas from the broader universe this time. First one is a stock from auto ancillary stroke OEM segment. Uno Minda is the name of the company. And our estimates are, friends, that if auto sector is going to do well, then auto ancillary, battery manufacturing companies and tire manufacturing companies are likely to do even better, given the huge new order market as well as replacement market for auto ancillary, tire manufacturing and battery manufacturing companies. Uno Minda has been a steady performer. Of course, the last couple of months it has been sideways because of the kind of acquisitions and the capex that the company had lined up. But now all that is in place, and I think numbers should throw in positivity, and that could possibly take the share prices to the next level on the higher side. So the first fundamental investment idea is from an auto ancillary pack called Uno Minda. Second one is from the housing finance companies, that is HFC, housing finance companies. Canfin Homes is the name, friends. Real estate sector has been doing well, and positive effect of that falls on to the housing finance companies. You must have read or heard some months back DLF selling record number of properties in the bracket of 7 crores in Noida NCR region. Signature Global today is one more name, some news flow in terms of big ticket flats getting sold out and lapped up like hotcakes. So our estimate says that one is, of course, real estate sector doing well will transform into positivities for housing finance companies, and along with that, friends, over the last 6 or 7 credit policies, we have seen steady interest rates. Most likely, if the GDP growth rate is going to move above and if the inflation is going to be within the comfort zone, sooner or later the Monetary Policy Committee members will come out with a recommendation to the Honorable RBI Governor with a smaller interest rate cuts. And if that happens consistently over the next couple of months, then our sense is that housing finance companies will also get benefited because their loan book growth will pick up momentum and their margins will start expanding. So two investment ideas, friends, from broader markets: Uno Minda from auto ancillary, and from housing finance company Canfin Homes is the name that we are extremely positive. But mind you, friends, these are all long-term investment ideas, so please bear in mind that you should have stretched time horizon, 12 months, 16 months, 18 months, more the better, to give a reasonable return on your investments from these two companies. Please don't put all your money at one time, do a little bit of homework. Staggered buying is always a disciplinary approach that you should use investing into the stock market, and whenever you get corrections or falls in the market, use those falls and corrections to add to these two stocks. Thank you very much for your patience hearing, and I'll see you again next week. Till then, please do take care of your stay.